Welcome to another FAR walkthrough video. I'm Logan, and in today's video, we're going to be going over the Statement of Comprehensive Income. And we're going to be doing that the super fast CPA way, which is diving straight into questions to learn the material. If you don't know much about our strategies, make sure you go to superfastcpa.com and check out our free 1-hour webinar training. We teach the key ingredients to passing the CPA exam, and again, it is only 1 hour, it is free, and we will show you how to be effective and efficient with your studying so you don't waste any time. The link to that will be in the description. Also, just letting you know, we will only be going over 5 questions in this video, whereas Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So if you like this, you can get more of it and more practice by becoming a Superfast CPA member. With all that said, let's dive straight into the questions. Alright, here we are at question 1. What best describes the Statement of Comprehensive Income and its primary purpose? So right away, we're going to try to figure out what the Statement of Comprehensive Income is, and also what its use is. If you don't know much about that, that's okay. We're going to go straight to the answer to start learning and give ourselves a base for the rest of the video. Alright, the answer is C. The Statement of Comprehensive Income provides a complete view of all changes in equity that arise from non-owner sources, including unrealized gains and losses, helping users assess the full impact of economic events on the company's financial statements. Or I guess that said status. But let's look at the explanation. The Statement of Comprehensive Income includes all changes in a company's equity during a period that result from recognized but unrealized revenue and expenses, along with other items not recorded in net income. This statement is crucial as it allows stakeholders to see beyond the net income and understand all the economic events that affect the company's equity, thereby providing a fuller picture of its financial health and performance. So essentially, it's more than just an income statement. It seems like it takes into account net income and additional other items so that we can get a bigger view of how the company is actually doing. Now, again, this is just a base from this question, so let's go to the next question to continue learning. All right, here we are at question 2. Which of the following scenarios would most likely result in an increase in comprehensive income? Okay, we talked about it a little bit. It's some unrealized things in the previous question, but again, if you don't know much about this, you might not really know what would or what wouldn't increase the comprehensive income. If you want to try, go ahead, pause the video, and think through these different options. If not, let's go ahead and go to the answer. All right, the answer is C. The company experienced an unrealized gain on its foreign currency translation reserve due to favorable exchange rate movements. Okay, so let's read this explanation to get a bigger view. Comprehensive income includes unrealized gains and losses that do not appear in the net income statement. Okay, we kind of talked about that. An unrealized gain on foreign currency translation reserve recorded in other comprehensive income, and by the way, we'll talk about other comprehensive income in the next video, directly increases comprehensive income. This gain reflects the increase in value of foreign currency denominated assets or liabilities, translating to a higher comprehensive income due to favorable exchange rate movements without requiring realization through a sale or settlement. Again, it looks like it has to do with things that are not on the income statement, but are more like unrealized things that are still affecting the company in the background, but again, they're not directly on the income statement. So again, helping us get a better view of what is actually happening in the company. And like I said, we will talk about other comprehensive income a little bit in this video, and then the next video will be all about other comprehensive income. It's very connected to the Statement of Comprehensive Income. Let's go ahead and go to the next question to learn more. Okay, here we are at question 3. XYZ Corporation reported the following financial items for the fiscal year. Revenue of $500,000, cost of goods sold $300,000, operating expenses $100,000, interest expense $10,000, gain on sale of equipment $20,000, income tax expense $15,000, unrealized gain on available for sale securities $25,000, and loss from foreign currency translation adjustments $5,000. Determine the comprehensive income for the fiscal year. All right, if we have no idea how to prepare a comprehensive income statement, that's okay. You might not know what numbers go into it, but the great thing is it's actually pretty straightforward and pretty easy. So let's go ahead and go to the answer to start kind of showing you what it actually looks like when it comes to a comprehensive income statement. All right, the answer is $115,000. So let's walk through this. First, you need to calculate the net income. So if you know how to do that, if you know how to calculate net income on an income statement, then you've already learned how to figure out most of the Statement of Comprehensive Income. So first, you have to get net income, which of course is revenue less the cost of goods sold, less the operating expenses, less the interest expense, plus any gains or losses on the sale of equipment or anything like that, like things in the non-operating section of the income statement. And then you subtract the income tax expense, and if there was anything from discontinued operations, you would consider that as well. But in this case, there wasn't anything like that. And that gives you the net income, which in this case, again, is that $500,000 from revenue less the $100,000 of operating expenses, less the interest expense, plus the gain on the sale of equipment less the income tax expense. And you might have to figure out the income tax expense on your own. But anyway, that gets us a net income of $95,000. Now again, that is the majority of what you need to figure out already. Now you just need to add in anything from other comprehensive income, and that in this case would be the unrealized gain on securities and the loss from foreign currency translation. So together, that's $95,000 plus $25,000 less $5,000, giving us $115,000 of comprehensive income. So again, it's pretty straightforward. As long as you know how to prepare an income statement, the statement of comprehensive income is just adding on other comprehensive income. It's just net income plus other comprehensive income. Essentially, this statement can look like an income statement while adding items of other comprehensive income on at the end. So now that you kind of have an idea of what it actually looks like, let's go to the next question. Here we are at question 4. Which of the following statements is false regarding the statement of comprehensive income? So we've learned a little bit so far. You might be able to answer this correctly. Take a second, think through these different options, think which ones might sound correct and which one kind of sounds off from what we've learned so far. When you're ready, come back, we'll look at the answer together. All right, the answer is B. Items reported in other comprehensive income must be recycled to the income statement when realized. So this is false. The other ones were correct. So if you remember what the other ones are, that's great. We're going to look at why they're correct at the bottom here. But here's the explanation. Not all items reported in other comprehensive income are recycled to the income statement when realized. While some items like unrealized gains or losses on available for sale financial assets are reclassified to net income upon realization, a process known as recycling, others, such as gains and losses from changes in revaluation surplus or actuarial gains and losses on defined benefit plans, are never recycled to the income statement. Therefore, statement B is false, as it incorrectly suggests that all OCI, or other comprehensive income items, must be recycled, which is not the case. Now, the other ones are true, and I'm going to go over these a little bit here as well. Statement A is true, and if you remember, Statement A says the statement of comprehensive income includes all changes in equity during a period that are not resulting from transactions with owners in their capacity as owners. That's true because the statement of comprehensive income captures all changes in equity from sources other than owner transactions, like share issuance or dividends. So it doesn't capture the owner transactions, like the share issuance or the dividends, but it does capture all other changes in equity. C is true because companies do have the option to present comprehensive income either in a single statement, where it's just the whole income statement plus the comprehensive income all in one statement, which combines the two, or in two separate but consecutive statements where the first statement presents components of net income, so the income statement, followed by a second statement that's separate, starting with the net income and presenting components of other comprehensive income. And then finally, D is true because comprehensive income is calculated, like we learned before, by adding net income, which is the bottom line of the income statement, to other comprehensive income items. Okay, we learned a little bit more. Let's go to the next question. Okay, here we are at question 5, and this is similar to question 3. You have to figure out what the comprehensive income is. For the fiscal year ended December 31st, Oakwood Enterprises reported the following financial items. They have the gross profit, the operating expenses, the net interest expense, they have the income tax rate, so you're going to have to figure out the income tax yourself, discontinued operations, and there was a gain from that, and then other comprehensive income. So it gives us all this information, and again, we have to calculate the comprehensive income for the year. So you've learned how to do this before so far in the video. If you want to try, go ahead and pause the video to see if you can do the calculation yourself, and when you're ready, we'll look at it together. All right, the answer is B, $122,500. So let's walk through this. So again, you kind of have to do this as if it's an income statement, and then you work down to the comprehensive income. First, you have to calculate the operating income, which is the gross profit less some of the expenses, or the operating expenses. Next, you take that operating income and subtract the interest expense. That's what this $50,000 is. And that gives us the income from continuing operations before taxes. That's $150,000. Then we have to calculate the income tax, which is 25% multiplied by that income from continuing operations. That gives us $37,500 of income tax expense. We subtract that from the continuing operations, and that gives us $112,500. And that is the income from continuing operations. Then we add in anything from the discontinued operations, which in this case there was a gain. That's $132,500. That is the net income. So right there, that would be the income statement. But we're doing the statement of comprehensive income here. So we then add in any other comprehensive income items to that, to the net income, which in this case there was a $10,000 unrealized loss. So we get a comprehensive income of $122,500. So with just 5 questions, we've learned a lot about how the statement of comprehensive income works. Before we go any further, let's do one more part of the process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You will notice that, hey, this looks like it's just the income statement plus other comprehensive income. And you will notice things like that, the pillar topics that are obviously important according to your review course, so you write them down so that you know them for later and know them for the test. So let's go ahead and look at the pillar topics for this video. All right, here are the pillar topics. First, let's start with the purpose of comprehensive income. Comprehensive income provides a holistic view of all equity changes not derived from owner transactions, offering stakeholders a more complete insight into a company's financial health beyond traditional net income. As far as the objectives of comprehensive income, the primary objective of comprehensive income is to enhance decision-making capabilities by including all non-owner changes in equity, such as unrealized gains and losses, thereby offering a broader perspective on financial outcomes. And one thing I kind of wanted to point out here, I want to point out the difference between owner and non-owner changes in equity in case you don't really know what that means. Owner changes in equity involve direct transactions with shareholders, such as issuing shares and paying dividends, whereas non-owner changes include items like unrealized gains on available for sale securities, foreign currency adjustments, and changes in derivative instrument values. And then finally, as far as the structure, again, we've kind of talked about this, the comprehensive income statement extends the traditional income statement by adding sections for other comprehensive income items after net income, providing a sequential and comprehensive summary of all income changes. And with that, those are the pillar topics for this video. Thank you for watching. Before you go, make sure you check out our free 1-hour webinar training on superfastcpa.com. Again, it's an hour, it is free, and we will teach you how to pass the CPA exam without wasting months or even years of your time. Also, remember we only did 5 questions in this video, but Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So again, if you like this, you can get more of it by becoming a Superfast CPA member. If you like the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.